Hey everyone, Steve Kornbluth here at Safebridge Mortgages. I want to shoot a quick video, and it might not be so quick judging by all my notes I've got down here, but a quick video about what happened today. A lot of people are probably aware the Bank of Canada has raised their interest rate. So how does that affect you guys? How does it affect people who have a variable mortgage, an unsecured line of credit, a secured line of credit? So I just want to go through a few quick points, and I'll try to summarize my thoughts at the end. So why did the Bank of Canada raise their interest rates? Because back in 2015, we had some emergency rate cuts. We had two, and that was due to falling oil prices. Government's now saying that, hey, our economy is doing really well, so it's safe to remove those rate cuts we did in 2015. So what were the numbers the government looked at? Okay, they looked at the GDP when they decided to raise their rates, and they looked at jobs. GDP stands for the gross domestic product, and that was up 3.7%, which was great. Jobs numbers back in June we added 45,000 jobs in June, and we also added a significant amount of jobs in May. So both are great, but we need to actually dissect these numbers a little bit more, because of that 3.7%, a lot of the GDP was attributed to consumer spending. We'd like to see a little bit more on the manufacturing and export side rather than, consumer spending. Of the jobs, most of that, I believe it was about 31,000 of the jobs created in June were part-time. And a lot of the jobs were in the demographic of 55 and older. Really, we want to see jobs that are created in the full-time jobs on the 24 to 55 age bracket. So it's great that we're creating these jobs, but it might not be the right kind of jobs. And all of this is sort of all the other stuff that the Bank of Canada has to sort of keep in their back of their mind, whether or not they're going to raise rates again. With respect to inflation, our inflation right now sits at 1.3%. Ideally, we want it to be up at around 2%. If we keep raising rates, it might mean inflation is going to drop a little bit further, and that's not going to be good for the economy. Okay. Also, with respect to wages, even though we're creating jobs, the last wages report we've seen is that wages are flat. People are not making more money. We're getting jobs. We're not making more money though. Okay. Another issue they have to keep in mind is the Canadian dollar. As the prime rate goes up, we're going to start seeing an increase in the Canadian dollar. So what does that mean? It means it's going to be more expensive for countries to buy Canadian goods and services. So they might decide to go buy stuff from Mexico instead of from Canada. What will that happen? Will it result in job losses? Possibly. Okay. The other thing they need to keep in mind is right now consumers have a record level of debts. So as the interest rates increase, what we're going to see is consumers are going to possibly start holding back on their spending, right? Because they have to, spend more money to service some of their debts. So what will that do? They're not going to make those big purchases anymore. So we're going to see that as a reflection of the GDP. If the majority of the GDP was a result of consumer spending, and now we have interest rates going up, and consumers have to spend more on their interest debts than going out and purchasing new television and new furniture, we might see a dip in that GDP. Okay. As well, with respect to debts, the government is heavily in debt too. All right, they went into debt significantly to fund a lot of infrastructure costs. So now the government will have less money for those infrastructure plans. And what's the result of that going to be? Are they going to put everything on hold? I don't know. We'll see. We'll have to wait and see. I don't think the government wants to put projects on hold. So that might mean that maybe we won't see another rate increase, because they need to get these projects done that they promised the Canadian people. Okay. As well, let's not forget Trump, okay? We have no idea what Trump plans on doing. He's already threatened to blow up NAFTA, rip it up. He's put taxes on our softwood lumber, and that's had a significant impact. I read that that's going to probably result in a loss of 2,200 jobs out in BC. So we really don't know where his head is at. And if we see more taxes on our exports, then that might result in more job losses, in our manufacturing sector. Not a good thing. So the Bank of Canada sort of got to keep all of this in mind. So kind of to summarize, where should you be with respect to locking in your mortgage? Is now the right time? I'm not 100% sold that, now's the best time to be locking into a mortgage. Rates did increase, but that doesn't mean that if inflation stays low, right, and wages are staying flat or GDP is lowering, it doesn't mean the Bank of Canada won't drop the rate again. Now that they've raised it, it gives them room to drop it if they need to, okay? And also keep in mind, if you're in a variable rate mortgage right now, one of the main benefits is you have a 3-month interest penalty. A lot of people who are in fixed rate mortgages, if you do ever need to get out of a fixed rate mortgage, specifically with the charter banks, it can be a significant penalty. So, keep that in mind too, is you do have a 3-month interest penalty to get out of the mortgage if you ever need to. If you're worried about payments increasing on you, then yeah, absolutely. It might be worth a call, to whatever bank or institution you're with to find out what your new payment would be. Otherwise, my suggestion is to automatically increase your payments anyway. We know interest rates just went up. Let's start pretending that you have a fixed rate mortgage of 2.84%. Set your payments higher. This way, you're paying down your mortgage faster, and then if rates do increase again, you're not really going to notice it. That's what I've done with my own personal mortgage. I'm in a variable rate mortgage. I've been constantly increasing my payments over the years, so I have no intention right now of locking into a fixed rate mortgage, so I'm kind of eating my own cooking, to sort of say. So that's my summary in a nutshell. Thanks for sticking it out with me and watching it to the end. If you do have any other questions, give me a call, 905-290-0180, or you can always just shoot me a quick email, steve@safebridgefinancial.com. Happy to answer any questions you have. Okay? Have a great day, everyone. Bye.